everybody. Hope you're doing well. It's Lee here from Grasp Logic Perspectives again, and we're going to take a look at the stock market, do a bit of a checkup on three big indexes, the NASDAQ, SPY, and Dow Jones. We're also going to take a look at the volatility indicator. Let me just go ahead and accrue some more basic attention token here. If you guys aren't aware of the Brave browser, you can actually accrue BAT, which is a cryptocurrency, through, I guess, engaging in advertising, but that's a whole other thing if you want to make a cent per engagement and then hope that BAT goes on a run. But anyway, back to the stock market here. So we are taking a look at the NASDAQ because obviously, at least I have personally been bearish on indexes for a bit of time here, probably going on about 6 or 7 months that I've been short indexes, not directly but through inverse ETFs, just because it's a great way to hedge without having to actually go short and risk the like a situation like GameStop, where the situation for those shorts, they cannot. They're really going to have a very tough time locating enough shares in that way because of the pressure and demand for the GameStop stock at the moment. So I actually don't go short. It's not something that I do in terms of actually selling a stock short, but I will go through an ETF such as SRTY. Which, funnily enough, if you watch the GameStop stock, you'll see that they're definitely shorting SRTY. So in my portfolio, since I hold GameStop and SRTY, which is the short on the Russell 2000, I'll be able to see the effect of them shorting the Russell because my short ETF will be up, and then inversely that will suppress the price of GME. But anyway, I'm going off on a tangent here. Let's get into the technical analysis from a short-term point of view. So obviously, if we look at the 1 day here, we definitely hit a bearish divergence. Let me just fix up this line here real quick. But you can definitely see that we hit a bearish divergence. We did hit somewhat of a double top, it looks like we had 304 on the short term. But yeah, double top here, and then really just fell off abruptly, similar to what happened on the 14th of April as well. So we can see there's a narrowing range here. If we go to the 5 day, I need to go to the 1 month. If we go to the 1 month, we zoom in here. You can see that obviously every time that we've been hitting all-time highs, you have these large amounts of liquidity entering. And to me, what that says is it's probably to do with free-flowing capital and having access to capital and access to margin. One of the main reasons that I'm bearish, or my thesis is bearish, as I fix this line up here, my thesis is bearish is because I think that the market's propped up on really bad debt at the current time. Now you put in or you throw in the volatility added by the paradigm shifting kind of GameStop and AMC, the high short interest plays, and you really have a situation where some of the larger financial institutions are exposed in a way that they really don't want to be exposed. So since we are seeing we're seeing this double top and bearish divergence, I would expect us to stabilize and trade sideways tomorrow. But I wouldn't be surprised if we see this go lower, straight away, because obviously, just as I can reference the VIX here, so we do see, quite a lot of spiking, quite a lot of volatility in the VIX, and you can see, today, it looks like in pre-market, we had a lot of volatility, and then more volatility into the close. So obviously it looks like that was shrunk at the end there in a sharp fashion. But you can see that there is volatility, kind of. We're getting a feedback on the volatility S&P. So it's always good to keep an eye on the VIX, just because, especially if you are exposed to these indexes in any way. I find that the VIX can kind of give you a heads up sometimes. So let's go ahead and take a look at the S&P here. Again, we have a double bearish divergence, but I wouldn't say that this is super or as bearish as the NASDAQ chart that I was just showing you. Obviously, we did have a really sharp drop off here, and then we had that bounce and that large liquidity entering. But this definitely looks very toppy to me. It's not quite yet a head and shoulders, but we could see the shoulder there, the head here, and then if we do go lower, that could be bad. Obviously, like I said, I don't think that the market's in rapid deterioration at the current time, because we do still have SLR, we do have, which is the standard liquidity ratio, which is essentially it'll allow banks to access more money than they have, or than they would usually be using their fractional reserves, which is essentially where banks are loaning out money that they don't have. But that gets into a whole nother bag of worms. My whole point here with the S&P and the NASDAQ, I would say I am, short-term bearish and short to mid-term very bearish. If it comes to July and we're still seeing these indexes propped up in this way, I would be very, very surprised. Obviously, take anything I say with a grain of salt. I'm not a professional financial advisor. I just feel like, especially when you look at the technicals, you look at the amount of margin and debt that is in the market at the current time. I believe it was even the BlackRock CEO that said earlier today, or not the CEO, but the chief investment officer, CIO of BlackRock, that said that there is no value in the market today. Now obviously he owns, or his fund owns 13.7% of GameStop, so maybe there's some value there, but you can definitely judge that if that's one of the largest funds in the world, controlling a very large amount of money in the measure of tens or hundreds of billions. If there's going to be a bearish outlook in terms of a cynical bearish outlook that there's literally no value in the market today, I say that is a pretty stern warning. But then again, you got to stay mindful. They could be short on the indexes, or they could have an incentive. But again, I would tend to agree with the sentiment that we are over leveraged terribly in a financial sense right now when we talk about the stock market. Okay, so now we're going to take a look at the Dow Jones. Again, it's not quite as bearish, I would say, as the NASDAQ, but a bit more bearish than the SPY, because we can see on a short-term time frame here, we definitely double topped. So that's in one day on the 16th, and then we just kind of more or less have traded sideways today. So we really didn't see the Dow. There wasn't as much volatility in the Dow, but we can still see that there is a small bearish divergence. They failed to establish a handle here, so we did get a lower. Well, actually, we did get pretty much the same low, but a lower high. So, yeah, short term, I would say that the Dow Jones is bearish. Like I said, I don't have exposure on the bullish side to these. I am bearish. I do, have interest in short ETFs. But again, I feel like if you look at the technicals, we are on an upwards trend. But if we do break below, which it looks like we are, we're slowly testing as there seems to be small kind of pickups here. I do feel like if we do test that lower resistance, the way that things are at the current time, you can see that obviously it was only down 0.36% today, but in this economy, things tend to happen fast, whether that's bearish, whether that's bullish, and we've seen relatively sideways movement. So I would expect a move in the coming days. Probably not tomorrow. We'll see some stabilizing, maybe even a bullish move. But I would say, short term, I do not like the look of any of these indexes. Now let's take a look at GameStop really quick. Let me pull it up here. Here we go. Okay, so with GameStop, we are currently, within that channel. We can see that this is, kind of the last month here. If I go ahead and go to the 5-day, we can see that we did spike big today. And, on the, I believe that would be the 3 month. No, the 1 month. There we go. On the 1 month, we can see a cup and a handle, and it looks like that was pushed down, but then we do have another starting here, I would say, a nice little cup handle, and it looks like we did close at 165.70 today, but as you can see, a large amount of liquidity entering the space and a huge W on this cup on the 24th of March. So definitely the technicals don't look bad. I wouldn't say that this is even a bearish trend, more just sideways movement. And like I was saying, with the current situation, with how much exposure there is in this stock for the people on the short side, I really think it's just a matter of time before liquidity runs out, liquidity in their other long positions. Like I was saying, if there are other people that are looking at that chart similar to me, that are managing a lot of money, and they think, well, this does look toppy, and it doesn't look like we've gotten the response from stimulus we were looking for, especially when you think about the large amount of money that was received for stimulus. We have had some all-time highs set, but I just wouldn't say that the last month or two would boast a healthy, robust growth cycle in the stock market, which is expected because we are in an overvalued place, and we are due for a correction. But I mean, short term, I am very, very bullish on GME. I do hold GameStop stock. I honestly think by the end of this week we will see this stock, hang around the 180 mark. I could see it go higher, but again, there are pretty solid theories in terms of Max Payne, which is essentially manipulating the price of a stock. Obviously this is big money, but manipulating the price of a stock to ensure that options would expire worthless and out of the money. And essentially that's what we're seeing here with this narrowing movement. So yeah, I think that short term we are going to see some growth here, but it's just a matter of time to see how long it is until the DTC does enact certain rule changes that will require a margin call, or will require a large amount of covering to be done. And I believe when that takes place, we are going to see liquidity flow out of these areas, the NASDAQ, the SPY, and the Dow Jones quite dramatically. But like I said, I would be looking for a bearish outlook going into this week. Let me go ahead and earn some more BAT. There we go. And I would be bearish on the indexes heading into this week, bullish on meme stocks, because the paradigm is shifting, in my opinion. It used to be that you were looking at the various media sources, Market Watch or CNBC, to try to get wind of a hype stock or a stock that's being promoted. But I believe that paradigm's shifting, and now people on the short side just aren't comfortable and aren't going to be comfortable. And that's why I was saying before, I think it's just such a good idea that if you are going to go short, I would highly suggest considering a short ETF, just because that will reduce the raw exposure that you have, and you'll still be able to be exposed to a hedge or to some upside on a down swinging market. But like I said, just definitely I would be mindful of the technicals at the moment. Obviously I would, as always, I do not trade on leverage. I do not trade with any money that I can not afford to lose, trade or invest for that matter. But I definitely think that, judging from a technical standpoint, we are looking at quite a bearish period coming up for the rest of April. But I'd love to hear your thoughts on it. Obviously, either way, if you're bullish or bearish, I'd love to hear your opinion. Obviously, I'm not a professional financial advisor, but I do want to thank you for taking the time to watch this video. Feel free to leave a like if you did enjoy it, and subscribe if you'd like to see any more videos like this in the future.